Hello, everyone. The verdict is in. So, Bitcoin has shown us its hand and it's decided to do what it's going to do. So, we're going to talk about what's happened. We're going to review where we are, and we're just going to recap, what the plan might be given the current price action. So, where were we? So, as of a few days ago, just to give you a back scoop of what was going on. So we realized that we were creeping up from our deflection, our range deflection at the bottom, right? We realized this is a range, and we know what ranges do here. Ranges rotate. They oscillate from highs to lows. So we look to short at the highs and long at the lows. Simple premium and discount, quite basic. So we had our rotation up, and we had our 8-hour supply. And this 8-hour supply is the level we were waiting for Bitcoin to react from. Now, did we get that reaction? Of course. Yes, we got that reaction. But within that reaction, it wasn't a clear-cut reaction. What do I mean by that? We're going to look at that in a second. It wasn't a simple bounce from that zone. It distributed in that zone. Now, when Bitcoin distributes, it can do one of two things. It can break up or it can break down. And not just Bitcoin, any single asset, any single pair. It can break up or it can break down. Now we're just going to play this to see how this worked out, because I quite like this function. So brilliant trade. Obviously, if you got in based off of this signal, you would have been in quite nice profits at the moment. That would be a decent trade for yourself. But we're going to talk about the in-depth happenings of Bitcoin. So here we are. Now, if we use the bar replay tool, we realize that, let's say we were around here, okay? So as we're around here, there's a few things to be wary of. Number one, we are at our range high. Not only are we at our range high, we've also got this supply zone above us. Now, this is my favorite type of range, where we've got a range with a supply zone ahead, because it simply means that price can, have an overshoot past the range, dip into supply and change market structure on the way down and continue downwards. All right. And what were we saying yesterday? Yesterday we were saying, let's not forget we've got this trend line of liquidity over here. We've got this bull trend line of liquidity, which means price is respecting this zone. Price has respected the zone once, it's respected the zone twice, it's respected the zone 3 times, and price is approaching the zone. Now, of course, this is a nice zone to look for another long, all right? But also we know that for a convincing change in market structure to take place, we need a break of a major trend line. We need a major trend line to break. And what tends to happen after breaking a trend line? After breaking a trend line, we tend to get something like this, a retest of that trend line, and further continuation downwards. Now, will that always happen? No. Okay, but more often than not, it will happen. But let's see what happened here. As I said, price distributed at this zone. And when we get distribution, all our range models come to play. The range models we teach here over and over again, it comes to play. We can either break up or we can break down. So we're going to play the price action to see what happened. And obviously, if you enter this trade, the initial setup, well done, very well done. You're definitely in profits. Even if you limit all of that, you'd have been fine. But what I want to draw your attention to is, let's look at the market structure as we head up on the 1 hour. We're going to look at 1 hour structure. And this is going to be clear while we're doing this in a second. So if we chase our 1 hour structure, starting from this range low, we have a high point, we have a low point. We have another high point, okay? We kind of wick that level and we create a higher low. We create another higher high and we create a higher low, and then we create a higher high there. Now I've stopped there because that's the highest point the price has reached. Price has tagged our range high. Now this is looking like a very, very basic counter trend model 1. Now counter trend model 1 is where we get an immediate break in market structure from bullish to bearish. So we're printing higher highs and high lows, and we transition from printing higher highs and high lows to lower highs and lower lows. Okay, Now this is the least risky type of transition you can get. It's the least risky type of transition in terms of back testing I've done, and just also in terms of market structure teaching. Now, what do we expect after, we've printed a last high and low and we're looking to transition in structure? Well, clearly we expect this last level to get run. And what's this last level? This last level is your last high and low. So really and truly, what we want to see after this tag in supply and a deflection from our range high, we want to see a break bearish. We could enter on that break, but the risk to reward on that break is not going to be attractive. Ideally, we want to see a retracement back into that old supply zone, or potentially back to test that trend line and further continuation down. Okay, that's what we would like to see, but that's not what we got. What did we get? Let's build this narrative. So what we got is we got a range instead. We got distribution at this level. Hence, we've got a new range in red. Okay, so in purple is ideal situation, the most probable and the best situation for a short trade. Okay, but what we see here is a range, a distribution. Now this started to make me think, right, now what if we're simply waiting for a second entry model? Now what is a second entry model? A second entry model is where you have your range and you have your price coming up, creating higher highs and higher lows. It tags the range high. It then creates lower highs and lower lows, breaking the structure bearishly to the range low. It then breaks structure bullishly, creating higher highs and higher lows. And then it decides, well, I'm going to sweep this level. Not only am I going to sweep this level, I'm going to sweep this level by trading higher than the prior level. Many people know this as the classic SFP. All right. After that, I'm going to break in structure bearishly. I'm going to retrace, pull back to my supply zone, and continue down. And when I see that, I'm going to look to enter that trade right around here. Okay, so this is your counter trend model 2. This is less probable and less effective than model 1, but it's still a high probability play. So that's what we were looking out for. That's what we were waiting for. We thought the range was going to do that. And that's exactly why, our setup, our most recent setup, this one, was a second entry, or potentially a second chance, a second crack at this. All right. And we were waiting at that high to get that tag. But I did say I'm not entering that until we sweep that prior high. Okay. Now, what did Price do? Price gave us a range model 2 entry instead. Okay. Now, all these models may sound, lots of model after model after model, but trading is all about models. It's all about modeling human behavior, human interaction in a market. We're all buying and selling, and we have these strategies that model what humans, us, tend to do, retail and institution, mainly institution, high volume players, at these key levels. Okay, so that's why as a trader you do need multiple models, and we've got quite a lot that I'm sharing with you on these streams. All right, I'm not sharing all of them with you, but I'm sharing the ones that will help you make classic, good quality trades, especially as a beginner/intermediate trader. Okay, so what does Price do? Well, Price comes down, rotates at that range low as we expect. You could have obviously entered on that range low because we got a break in structure there if you wanted to play that sweep, but I didn't play that. Now, we almost swept that high level, but we didn't. Because I didn't enter that trade. I left it. Could have entered a short there, but I didn't. I waited. So we rotated down again. As we rotated down again, we rotated up. Okay. So what's Price doing? What Price is saying is trying to take out that prior high. All right. But sellers are stepping in. Again, it's trying to take out that prior high again, but sellers are stepping in. And each attempt seems like it's got less and less strength. So this attempt is higher than this attempt. So we've got a high attempt and decreasing attempt, another decreasing attempt. Okay. So what we've got here then is a failed, model 2. Essentially, we didn't actually get to sweep that prior high. And after that, what do we observe? We observe a break downwards. All right, so the verdict is in. The range has decided what it's going to do. Okay, I'm sure some of you entered here, and there were a few signals for you to enter here. We had a hidden bearish divergence, and that hidden bearish divergence is here. Now we had the price heading up, and we had our momentum waves heading down. The money flow can be a little bit distracting / confusing, but I've looked, and if you do look, there's also a supply zone over here. So if you look, there was a supply zone over here for you to enter, and we are in premium, so we looked as short in premium. So what does that mean? That means we had a classic range model 2 there. All right. Now, of course, these models are models that I teach one-to-one. So if you do want, access to these and you want to know exactly what I'm referring to, of course, you can watch these streams and you can pick it up with time. But if you want access to these models, we go over this in the bootcamp, and we go over this in a one-to-one session. So feel free to hit me a message on Discord if you want to find out more about these. Okay. All right. So what does price do? Well, price breaks out of our range. So what does that mean? Well, that means on the 1 hour, all of this was internal structure, because on the 1 hour, we have our last high low over here, and we have our last high over there. Meaning all this flirting around, all this playing around, it's just simply internal structure. All right. And then we've decided to break down. But as we've broken down bearishly. And we've taken that last high low. So what is the expectation of order flow? Well, the expectation of order flow, and what I'm waiting for is, I hope we get it, we may not get it, price might decide to flush all the way down, is the expectation of order flow is to get a retracement similar to what we had here. We break down, we retrace to continue downwards. Okay, this break did occur, so this is a model 1, but it just happened a little bit later. Bitcoin decided I am going to flirt around this range for a bit before I break down. Okay, so my next play is simple. My next play is a retracement play, a pullback into the zone. We've broken from our major trend line. Don't forget, this is our trend line. We've broken from our trend line. All right, I'm going to extend this. And after a break of a trend line, we expect a retracement back to zone. So now your job as a trader is to realize, where is this retracement going to take place? Of course, you can look to catch, the pullback. You can look to catch the pullback, but I'm going to leave that. You don't have to be in every single trade. I'm going to leave that pullback. I'm just going to wait for a retracement and look to enter on that retracement. Now, why are we getting some sort of resistance from this zone, a reaction from the zone? Could it be because that zone was a key zone for us earlier? Could it be because that zone was that 12-hour zone / value area high / POC that we were watching earlier? Could that be why we're getting a reaction there? It could be. So perhaps you investigate that and let me know. Okay, so there we go. That's the exact zone that we are at the moment, and we're getting a reaction. So do watch that zone. If you do get a change in market structure in that zone, take it. Honestly, take it, right? But make sure you're practicing good risk management. You're not risking more than 1% of your account, and you're managing your trade to see, is there a flip in structure? If there is, great. If there's not, let it ride. Continue to let it down. All right. So I'm simply going to analyze, in the case that we do get a retracement, where could that retracement take place? Okay. Well, first of all, I'm going to look to see, do we have any zones over here? Do we have any supply zones trapped in this expansion leg down? Well, let's take a look. Clearly, I can already see one in the 12-minute. We've got a 12-minute zone over there. So I'm going to draw that out, and let's call that a supply zone. Okay, I'm going to call it a 12-minute. All right. So that is an area where we had higher volume sales. All right. We had our quick buy and then lots of sales kick in. Okay. Of course, this is also a range. So really and truly, you could treat this as an entire range. This whole thing, you could treat this as an entire range. But if you wanted to refine it, we're going to refine it just to the 12-minute. Okay. Now I'm going to check. I'm going to start from the 4-hour. All right. And I'm going to check just to see whether we have any more zones. Like, this is a crazy 4-hour bar. Nice 4-hour bar. And it does look bearish. It does look like we're coming down. But are we going to get a retracement? So I'm going to investigate that to see, do we have any zones above us? Do we have any zones above us that have not been mitigated? And it looks as though we may have a zone here as well on a 1 hour. So I'm going to sketch that. I'm going to draw that 1 hour zone. It is a big zone, okay, but I like to draw all my zones just so I am well prepared, but you do not know what zone price is going to react from. So let's check the 45 minute. Do we have a zone on the 45? No, we do not. Do we have a zone on the 30? Yes, we have a zone on the 30. So I'm just going to draw that out as well, just so we've got that. So we know we have a zone within a zone in there. We can call it supply within supply. So I'm going to mark that out as a 30-minute zone. I'm getting so many phone calls today. I don't know why. Leave me alone. All right, 24-minute zone. Let's see if we got anything on 24. Well, that supply still stands. 15. We've definitely got something on the 12, which we've just drawn. On the 10-minute, well, not really. Okay. So on the 5-minute, let's quickly have a look. So we can stop there. We can stop there because chances are we've obviously got internal zones within these zones, but these are your major zones. Now, why am I drawing out these zones? These are my potential zones for that reaction play. We could get a move up like that, or we could get a move like that. We don't know which one yet, okay? So what am I going to do next? Well, why don't we take a look at what the traders were doing in this range? Let's take a look at where the high volume areas were in this range. So I'm going to take my fixed range tool to look at the volume, all right? And I'm going to see where were my high probability zones. What it's telling me now, it's telling me that we had, I'm going to move this up. It's kind of getting messy, isn't it? It's telling me that we had our value area low coming here. We had our value area high coming up there, and we had our POC, our point of control. Oh my goodness. Now look at this. Look at this. We've got a value area low coming confluent with our supply zone, our 12-minute supply zone. So what's that doing? That's reinforcing that supply. That's telling me, oh, this could be a strong supply. This could be the magnet for price to react from. Not only that, we're getting a POC that's confluent with our supply zone above. So these are definitely my two zones, okay, that I'm going to look out for. And these are where I'm going to plan my next shorts. Now I'm going to get rid of this for now because we don't need this. We didn't break bullishly out of our zone, okay? So that means these are my two zones that I'm looking out for, all right? Now, in the case that this is the low, I know lots of you are Fibonacci lovers out there. In the case this is the low, why don't you can take out your fib tool and you can draw that from the high to the low, okay? And just see, okay, where is my golden pocket coming out? Where is my 3.8, all the other percentages? I know Fib has so many different percentages. So we can take a look at that. I'm just going to make that nice and thick so we can see where that's coming out. Well, look at this. We've got this supply zone also being confluent with our 618 level. And we've got the higher supply zone also being confluent with our 786 level. So again, this is adding extra confirmation that these are juicy zones to potentially look out for, okay? And those are the zones I'm going to be watching. So that's my next trade. So what I'm going to do is I'm going to put my setup, potential short number 1, in the case we are coming back up, and potential short number 2, slightly higher in the case we are coming back up. Now, for those of you in that trade, well done. You've taken that trade, you're smashing it, you're in profits, and that's great. So make sure you are monitoring that trade properly. Make sure you are de-risking that trade when you can. If we do retrace back and break structure again, there's no reason why your stop loss should be up and that high. Your stop loss should have been moved at least to entry or in profits, okay? But look, this is a juicy trend line, all right? Hopefully we get a retracement back, but the chances are if we do not, there's no reason why these stop losses are not getting run. There's no reason why these stop losses are not getting run, all right? So this means we're looking to come down to at least this level, okay? If this is looking to play out, at least on that 1 hour breaking structure. And now if we do come and retrace all the way back deep to this level, then hey, look, considering this is our big range, we're already past halfway through our range. So why don't we just rotate all the way down and test that range low? So that's worth thinking about, all right? But that's my next trade plan. I'm going to get rid of these. I'm going to get rid of this, the volume range profile. But that's it. Those are my two shorts. That's what I'm looking out for. You could look to play this, all right? But really and truly, I'm not in the mood. I'm not in the mood to go counter trend right now. We've just broken bearish, all right? So I'm going to wait for that retracement. All right, so that's what I'm going to wait for. Also, because I've got meetings after meetings after meetings today, I've got like 3 lessons that I do need to do this evening. And so I'm not going to be watching that trade. So I'm going to leave that to you guys. Please take that one if you get the confirmations, because that was given in advance. That was a level we were watching out for earlier. So if it does come out, please take it. And if you do take it, remember to hit me up on Discord. Screenshot your profits. Try not to put the numbers. Don't put the actual values. I don't want to see the values. We don't care about the values. We just care about the percentages. So make sure you're putting your profits in your profit wall. If you're trading, £50,000 compared to if you're trading £50, it doesn't matter. All right. So don't be discouraged when you see crazy P&L shots. Just keep going at it with your percentages and make sure you're compounding as you go. Compounding is a powerful thing. All right, so there we have it. These are my 2 shorts. We're looking to see if we can enter the action based off of this. And if we do, that would be great. Otherwise, I look forward to hearing from you, and I will see you tomorrow.